Ben Reppond. Welcome to my YouTube broadcast. Today is the 24th of September, 2025. Begin with the dashboards. This is, I think, the second week in a row where we've had all green dots on the right side. These are 6 equity indexes, 4 U.S., 2 foreign, and long-term government bond at the bottom. And they are all positive year to date, and they're all above their 20, 50, 100, and 200-day moving averages. Pretty amazing. Very rare. In the yellow box, they're also listed, and you can see the performance for this past week, a couple negative, and most are positive. Okay, the S&P 500 is broken into 11 major industry sectors, component parts. And this is a chart of those 11. They start from the top down based on year-to-date performance. The ones that have a higher performance, are in the red box, and of course the ones that have lesser are at the bottom. And then to the right of that are the red dots, green dots. Green dots are above the 20, 50, 100, and 200-day moving averages going across the page. And you can see that, and then red dots mean below the moving average, green dots above the moving average. And they are mostly green. There are 35 that are green, and I think that's right. The rest are red. In the yellow box are the performance for this past week. More were negative than positive. The S&P 500 continues to climb. You can see from the black arrow and the line of the S&P 500 going up and up and up from 3 years ago, and also from its bottom in the first week in April. You see that dip in the last part of the chart, and then it went up from there. That was first week in April. I put the same chart on a candlestick basis, and you can see the weeks, especially since the first week in April, most of those are hollow, which means those are up weeks. This is just 2025, and it is done not on a weekly basis, but on a daily basis. So the days, it looks a little different, but the most pronounced thing is the dip in April, early April, and then it shot up from there and has continued to climb. It has not had much of a pullback since that period. This is a relative strength chart. This is the NASDAQ 100 numerator, S&P 500, the broad market denominator. It is going up. You see at the very far right of the chart, it tilts up, and that's showing that the NASDAQ 100 is stronger than the broad market, the S&P 500. A different chart, but it's sort of the same story, separating the S&P 500 into 2 parts, the growth part and the value part. The growth part is the numerator, so when it goes up, it favors the NASDAQ 100. When it goes down, it favors the S&P 500. At the end of the chart, I think it's the last 2 or 3 weeks, it's been going up, which means the NASDAQ 100 has been on a more favorable basis. The S&P 500, compared to the small cap Russell 2000 index, quite different. When it goes down, it's favoring the Russell 2000. When it goes up, it's favoring the S&P 500. So I put a little red arrow at the very end of it so you could see the degree to which lately, in this past month or so, lately that the small cap index is more in favor than the large cap index, S&P. Long-term government bond. Two arrows here, two trends. A longer-term trend showing that the TLT, the long-term government bond, is generally on a downward trend, and there are periods where it goes up short-term, but overall going down, and a more intermediate-term trend for almost a year, with a red arrow showing that it actually is done more going up than going down. The dollar continues to decline. This is a 4-year weekly chart from about the beginning of the year, mostly in a downward direction. The S&P 500 compares to the South Korean ETF, which is EWY, kind of the same as our SPY. And that has gone down. My black arrow shows it's gone down and continuing to go down, meaning that South Korea, since about the first of the year, South Korea is stronger than the U.S. stock market. Volatility index generally been moving down since that low in early April of the S&P. The volatility part of that was up, so it's usually inversely correlated. Silver. Now, I've mentioned this. Silver is on a tear. It is going up rapidly. It just seems to, nothing seems to stop it. So it is making new highs, and certainly for this period, and maybe not quite yet, but maybe an all-time high soon. And even this morning, this is as of Friday, so even this morning, up again nicely. So it did not hit $44 an ounce, but it's between $43 and $44 an ounce. So quite good for silver. Okay, gold going up like silver a lot. It has been more consistent, but it's also doing extremely well. Bitcoin down a little bit this last week, but again, overall for this 3-year period, done pretty well. Gold and silver. As of last Friday, so measuring from Friday to Friday, the increase in gold value was $3,684, an increase of 1.2%. From the previous Friday. Silver, 43.01. And as I said, it's on its way to 44. I mean, just blowing right past 43 almost. Gold-silver ratio, 86-1. A monster box of silver, and this blew right past 20,000. It was at 20,000 for a short time. Now it's over 22,000, 22,235. For a monster box of silver, 500. That includes, now this has gone up, includes a $1.46 markup commission on the over spot. Now that varies from retailer to retailer. I got this from my son, and that would take it to $44.47 per ounce. Okay, if you have questions or comments, leave them in the comment section below. Thank you.